In today's video, I want to talk about this sudden drop here below 60,000 for Bitcoin and the Bitcoin price diving below 60,000 less than 24 hours before the halving, and traders handling volatility ahead of the Bitcoin halving because analysts are split, and also what Jamie Dimon is saying about Bitcoin in the upcoming halving about how we can expect more selling of the price of Bitcoin in the near future. And if you find any of this interesting, then you should definitely keep watching this video. Hi, welcome in there. My name is Josh. This is the Crypto Bits channel where we discuss all things Bitcoin and crypto related news. Now, let's get into it. And jumping directly into it, let's get right into this article that was posted by Andrew Hayward saying that Bitcoin price dies below 60,000 less than 24 hours before the halving. Okay, Bitcoin fell again late Thursday amid reports of explosions in Iran without the quadrennial halving event less than a day away. It also says here the Bitcoin halving is less than a day away, but the price of the leading cryptocurrency isn't showing much strength ahead of the quadrennial event. The Bitcoin price plunged below 60,000 late Thursday for the first time since late February, falling as low as 59,573 at crypto exchange Coinbase. The latest dip extends Bitcoin's recent losing streak, pushing its weekly dive to nearly 14%. Bitcoin's price has now fallen 18% since hitting an all-time high price of 73,737 just over a month ago. Following the sudden dip, Bitcoin's price has rebounded slightly to 60,945 at present. It's still down by more than 1% over the past day, but plunged from a price of over 63,000 to below 60,000 in less than 2 hours. Thursday's slide corresponds with another bout of geopolitical conflict, too. Explosions have been reported near a military base in Iran in the last hour plus, according to news outlets. A U.S. official told CNN that Israel has struck Iran. Moving on further in the article, while details remain sparse at press time, the reported conflict follows a barrage of missiles and drone strikes that Iran fired at Israel last Saturday. Crypto prices similarly plunged amid last weekend's events as well. Other top coins like Ethereum and Solana have also dipped substantially over the last couple of hours, but are starting to rebound. The further downside could cool excitement around Friday's Bitcoin halving, the event that takes place approximately every 4 years in which the Bitcoin reward given to miners is slashed in half. The move is typically associated with an eventual rise in the price of Bitcoin due to a supply crunch. And that sums up the article there. So an interesting thing to point out is that we are seeing more escalation in the Middle East, which may have been the cause for this sudden volatility in the price of Bitcoin. But as you can see here on the charts, that we have quickly recovered from this dump, approximately 4%. But we know that the halving is less than 24 hours away, so anything can happen in the meantime. But as of now, at this article, we are currently seeing some positive momentum heading closer towards the halving. And zooming out here, we can kind of see that Bitcoin's price is slightly slanted towards the downside, but it doesn't mean that we're going to continue going down lower in prices. But we can see here that we're kind of in this zone where we've been currently bouncing up, back and forth. So it's possible that we could come back up here and continue to go sideways here. But there's no guarantee to that. We could also go down, or we may go higher from here. But just something to keep in mind. They do say that the trend is your friend until the end of the trend when it comes to trading. So if we zoom out here, you can see that currently we are still in an uptrend. And yes, we have had minor pullbacks here. It looks like we are having some here. We've had some pullback, and we also had some pullbacks here. But this is completely healthy and natural when it comes to a bull market and the price is going upwards, because the price can never go directly straight up and aligned. We also have to have some pullbacks to shake out some of the traders on the way upwards. And zooming back in here on the price, we can see that the volume has been going downwards. So this tells me that this move that we're currently experiencing is done possibly by one large player or a handful of large players, as there's not a lot of trading taking place leading up to the halving. Also, another thing to point out is that currently RSI is still below the 50 midway points, so the sellers are also in control and have the momentum here in the market. But that does not guarantee that prices will continue to go downwards, but it is just something to keep in mind, to look out for, so that we are not surprised if we do see lower prices. Rather, we are looking for buying opportunities to capitalize on these cheaper or lower prices. Now, moving on to the next article here written by Andrew Ruvalis, it says, the title of the article is How Will Traders Handle Volatility Ahead of Bitcoin Halving? Analysts are split. On-chain analysis back a bullish view, but major banks see more losses ahead. The notorious volatility of Bitcoin's price is ramping up, approaching the eve of the next Bitcoin halving, making it increasingly difficult to predict where things land after the event. That doesn't stop anyone from trying. Expert prediction of post-halving Bitcoin price movements differ depending on the lens used to examine the market. On-chain analysts, for example, are directionally bullish, while technical analysts are much more cautious. It's hard to tell, but certainly the sell pressure from traders has been diminishing as they have basically taken all profit. Julio Moreno, head of research at CryptoQuant, told Decrypt. According to the firm's metrics, the short-term holder realized price has returned to near equivalency with the asset's market price. That means the short-term traders, in aggregate, are no longer sitting on large profits that would incentivize them to sell immediately. Unrealized profits across the network were fairly large until Bitcoin's pullback this month. CryptoQuant said, fueled by slowdowns in Bitcoin ETF inflows alongside escalating conflicts in the Middle East that impacted all risk-on markets. Though crypto Twitter may have been spooked by the pullback, analyst firm Into the Block says it was business as usual for Bitcoin, again citing investor profitability. At the time of the highs, over 97% of holders were in profit for an extended period, said marketing director Vincent Malipard. This rarely occurs and is never sustainable. Comparatively speaking, the size of the pullback wasn't even that large, he added, only falling 10% to 20% from its highs. Before the 2017 cycle top, Bitcoin experienced multiple drawdowns exceeding 30% from its highs. Meanwhile, momentum metrics tracked by Glassnode continue to trend higher across all time frames, a sign that bull market momentum is largely underway based on changes to the average active investor's cost basis, the firm said. The cool down is underway on the faster 30-day indicator, which is what we want to see for a proper asset, Glassnode's lead analyst James Check wrote on Wednesday. And here's James Check's Twitter or X.com profile, saying the Aviv Momentum Indicator also remains in positive territory, with all time frames hitting higher altitudes on each successive peak. A cooldown is underway on the faster 30-day indicator, which is what we want to see for a proper reset. Don't let your confidence be shaken by short-term noise, folks. We have a wealth of data and information available for Bitcoin, which we can use to keep ourselves grounded. Keep an eye out for my situation analysis published tomorrow for subscribers. And here he leaves a website where you can go and keep track of the on-chain data that he follows, saying that we are still bullish. So, continuing on with the article, on the other hand, analysts for banking giants JP Morgan and Goldman Sachs have both warned that Bitcoin's price could suffer in the aftermath of the halving. We see a downside for the Bitcoin price post-halving for several reasons, wrote JP Morgan analysts led by Nikolaus Panigert-Zoglau in a Wednesday report. The bank believes the halving has already been priced in by the market. For one, is estimating that the asset's volatility adjusted price relative to gold should be closer to 45,000. The crypto market has also experienced a lack of venture funding, it noted, and Bitcoin futures open interest remains elevated. In a report last week, Goldman Sachs acknowledged that Bitcoin's price usually surges to new highs after the halving. but that the timing of the surge differs between different cycles. The halving itself, it claimed, could also be a sell the news event. Caution should be taken against extrapolating the past cycles and the impact of halving, given the respective prevailing macro conditions, the bank's analyst said. And that wraps up that article. Now we can kind of go back here and kind of zoom in on something that he said that kind of stood out here. Let's see. So here he mentioned that this could be a sell the news event. And currently we are seeing that that seems to be more true than ever because we are less than 24 hours at the halving and we are down from 74,000 and we went as low as 59,000. So it looks like a lot of the buying came in anticipating that this halving was coming up, and now people are de-risking because they're unsure of whether or not Bitcoin price is going to continue upwards or if the Bitcoin price is going to go downwards from here. But as this on-chain data analyst, James Check, wrote that this is actually a healthy correction and that we're just resetting at a higher floor. So if that is the case, we could be gearing up to make another leg to the upside. And this would agree with what other people have wrote and talked about for the price of Bitcoin. And they are currently giving it a price target of around 83,000, but that doesn't mean we have to stop there. We could easily, in my opinion, go see something like 100,000 before we do get a more volatility or severe pullback, which could take us back down to like 80, because that would be a 20-ish% pullback from 100, or we can even come back to 70, which would be 20 to 30%, which is what we are used to seeing. But I think that either scenario could play out, and we could just go down from here if the sell the news event is actually in place, which it looks like it is. But like I said earlier, the trend is our friend until the end of the trend. So you never want to be left behind when opportunities like these arise. So it is important that we keep a bit of stable coins on the sidelines so that when opportunities like this arise in the markets, that we're able to buy these dips, because a lot of the market here is currently in a huge discount, some even down as much as 25% or higher. BitTensor here is 29%, 29%, 34%, 33%. So some of these coins are at humongous discounts. Now, how long they are going to be here, nobody knows. Can we continue to go downwards some more? Absolutely. But do we reverse here and completely just rocket and go straight to the moon from here? Absolutely too. But looks like the on-chain data says that we could be here for a few weeks and kind of go sideways or be in a range before going higher. We have none other than Jamie Dimon, the fraudster himself, calling Bitcoin a fraud. And in here, he says that Bitcoin is a fraud, says Jamie Dimon, who vowed to not talk about it again. The JP Morgan CEO revisits some of his classic digs, calling Bitcoin a decentralized Ponzi scheme. Jamie Dimon has yet to more to say about Bitcoin, albeit things he's known for saying before. In an in-depth interview with Bloomberg on Wednesday, the JP Morgan CEO reiterated his stance that Bitcoin is a fraud. If you mean crypto like Bitcoin, I've always said it's a fraud, Dimon told Bloomberg's Emily Chang, adding that there is no hope for it as a currency. He also called Bitcoin a public, decentralized Ponzi scheme. but conceded that blockchain and smart contracts have value. If it's a crypto coin that can do something like a smart contract that has value, there will be smart contracts and blockchain works, Dimon said, to the extent crypto is accessing certain blockchain things that might have some value. Crypto Twitter reliably took a break from watching the Bitcoin halving countdown clock to poke fun at the CEO. Buddy is flooding our bags for a better entry, Wall Street Bets said on Twitter. And another one by Watcher.guru. Just in, JP Morgan CEO Dimon says Bitcoin is a fraud and a Ponzi scheme. JP Morgan is an authorized participant for BlackRock Spot Bitcoin ETF. And here we have a video. Play this short clip. Okay, and moving on, Trader Joe here, same energy. Old man yells at cloud. Nice. That's basically Jamie Dimon, the old man. I don't love him. Now, the Matrix likes to send signals to buy more Bitcoin. Bitcoin Monger said, this is one of those signals. And here's another clip. So, looks like this small clip is being reposted around the internet, on Twitter, or on X, I should say. And we talk about here, great comeback by Jess, Crypto and Coffee, discussing the bigger Ponzi, which is fiat. While Dimon may see value in smart contracts and blockchain, the long-term critic of Bitcoin has said the only use case for the digital currency are for sex trafficking, tax avoidance, anti-money laundering, and terrorism financing. Wow. Good one. Dimon has said that if the bad use cases can't be solved, regulators must shut it down. That would be a tall order, considering there are over 20,000 Bitcoin nodes currently online. After years of discussing the number one digital asset by market capitalization, Dimon swore not to speak about Bitcoin again during an interview with CNBC at the World Economic Forum in Davos, Switzerland in January. This is the last time I'm ever talking about this on CNBC, so help me God, Dimon proclaimed. The executive's constant reproach of Bitcoin does stand in contrast to investment moves by his own firm, JP Morgan. JP Morgan is an authorized participant in spot Bitcoin ETFs from BlackRock, Invesco, Galaxy Digital, and Fidelity, which the U.S. Securities and Exchange Commission approved earlier this year. That's odd. In a December report, however, a JP Morgan analyst expressed skepticism about the long-term effect of Bitcoin ETFs on the market and said Ethereum is poised to outperform Bitcoin in 2024. And that concludes that article. So going back here, we know that the real Ponzi here are the banks and the banksters. So for him to say that Bitcoin is used for all these bad activities like sex trafficking, tax avoidance, anti-money laundering, and terrorism financing is tough because from my recent memory, Bitcoin's only been around since 2009, and we've had paper money and fiat currencies for 100 years. So I wonder which one has been used for more of the things that he is accusing Bitcoin for. And also, another thing I like to point out is that if you know much about crypto, most of that stuff is being used on privacy coins because, in fact, Bitcoin actually is traceable. And so privacy coins are where criminals would go to use crypto. And it's still a small percentage compared to what he's actually touting out there and repeating repetitively so that he can FUD Bitcoin, because we know that he secretly is buying and or supporting business ventures and companies like BlackRock to go out and buy Bitcoin. And last I checked, BlackRock was buying a lot of Bitcoin along with Fidelity from a Grayscale. So just to keep that in mind. Okay. And now moving on to the next thing. Let's go here. Now, he did mention that if it's a crypto coin that can do something like a smart contract that has value, there will be smart contracts and blockchain works, Simon said. To the extent crypto is accessing certain blockchain things, that might have some value. And we already know, once again, that Jamie Dimon and JP Morgan Chase has a blockchain team that is working on building blockchain products and working with smart contracts. So for him to be very vague on these types of statements just goes to show you can't always believe what they say. You have to watch what they do. Because he also told employees not to buy Bitcoin at $4,000 and that he would fire them if they did. And here we are. Bitcoin is $62,000. And last 2 weeks ago, it was at $74,000. So, I mean, if you do listen to them, be cautious, make wise decisions. But I think if you want to increase or maintain your purchasing power, Bitcoin is definitely a better option than the stuff that the Federal Reserve and the banking system is peddling out to the public. And now going on to a smaller time frame than the weekly, we can go to the daily and kind of see that in times where we have been overbought, we did come back down almost to neutral, but we went right back and went back to being overbought. Now, this one here looks a little bit different, as we can see that it actually is trending the downside here. Another thing here to break down in the article, they say that we do not expect Bitcoin price increases post-halving as it has already been priced in. Now, we do not have a guaranteed way of showing whether that's actually true or not. We do know that in the past, we have not ever seen the prices break new all-time highs prior to the halving. So, if that is the case, why is it that we are so much higher than normal than in past times where we've still usually been at most less than 30% close to the all-time highs? So this could work in the past, but there is no guaranteed or sure way to know whether or not this has actually been priced in. But we do see from the charts, what the charts are telling us is that people are wanting to take profits here. That is all that I can say. People are wanting to take profits. And if they had bought a year ago, then that absolutely makes sense. But there is no way to guarantee that it has been priced in, because what happens if we just from here continue to go higher and go to 100,000 in 2 weeks or more? So in 2 weeks, if we're going to 85,000, then what can be said about the halving being priced in? Would they be correct or would they be false? Well, we don't know. This is just what they're saying as analysts, and that is fair because that is their job, and they have to make assessments and come up with conclusions. But it looks like so far we can see that it has been a sell the news event, but we'll know later today because the halving hasn't happened. So once the halving happens, and if we are seeing more selling, then okay, I will say that they were right and that this is a sell the news event. But until that happens, I am going to just stay neutral. One thing we do know for sure is that once the halving takes place, the supply of Bitcoins that are issued or mined every 10 minutes is going to be cut in half. So assuming that demand sticks around or remains relatively the same and the supply is cut in half, then I would expect that our trend to the upside is actually going to continue rather than Bitcoin's price coming downwards and crashing. But in the past, we have seen 30% corrections, and that is totally fine. Here we can go here, 30% will take us to about 50,000. Some people believe that we could even see 40,000. So if we were to come down from here to 47,100, we'd be about a 35% correction. And we could healthily go upwards from there, as we have definitely resetted most of the indicators here, like your RSIs on larger time frames. So looking out for that possibility, and I will definitely have some stablecoins ready on the sideline waiting to buy that dip if that does happen. Now coming full circle and wrapping up this stream. So Bitcoin's price in the last 24 hours did reach 60,000 and went to 59,950. Traders handling volatility ahead. Most traders are on the sidelines, and on-chain analysis and researchers say that the price is still bullish. And we have another article by Jamie Dimon calling Bitcoin a fraud and a Ponzi scheme and says it's for criminals. And analysts at JP Morgan believe that the price of Bitcoin's halving has been priced in, and we should expect seeing further selling. And so that's all that I have for you guys today. Hopefully you guys found some of this information useful. And always remember that none of this is financial advice, and I'm not a financial advisor. Always do your own research. And please remember to like, subscribe, and leave a comment below about anything that you'd like to hear about or have me read about or draw up in the charts. And as always, remember to keep calm and crypto.